Assalamualaikum, we are from group 9. My name is Muhammad Imran bin Yusaini. My metric number is 23 DBS 25F1097 and this is my fellow friend.
Hi, my name is Khalid Faramu and my matric number is 23 DBS 25F193.
Assalamualaikum, my name is Muhammad Amin Ofal bin Syari Yusri. My matrix number is 23 DBS 25F1061.
Assalamualaikum. Hi, my name is Marabatin Sabitia Musa. My matric number is 23 DBS 25F1043.
Assalamualaikum. My name is Wan Damia Maisara binti Wahadili. My matric number is 23 DBS 25F1041.
Assalamualaikum. My name is Siti Syahida binti Muhammad Nurul Science. My matric number is 23 DBS 25F1089.
Today we are going to talk about introduction to accounting and accounting process and book of accounts. The contents of this topic is discuss the function of the Malaysian Institute of Accountants, which is MAA, and secondly discuss the types of accounting field and explain the accounting concepts, and last but not least five source documents.
Today I will be presentation about Malaysia Institute of Account MIA and Malaysia Accounting Standard Board MASB. Let me be presenting about the Malaysia Institute of Accountant or MIA. MIA is the official body that regulates accountant in Malaysia. Its main function are to control and monitor the accountant professional, to set ethical rules and standards for accountants, to provide training and education for members, to represent the professional locally and internationally. So, next we have the Malaysia Accounting Standard Board or MASB. MASB is responsible for financial reporting standard in Malaysia. Its the key function are to create and issue accounting standard called MFRS, to ensure companies follow these standards, to give advice and explain how to ask the standard, to promote consistency in reporting financial.
Today I will be discussing three main types of accounting fields, which are financial accounting, cost accounting, and management accounting. Firstly, financial accounting is mainly about recording, summarizing, and reporting a company's financial transaction to outsiders like investor, creditor, or even the tax authorities. It usually deals with past transactions and follows standard rules like GAAP or IFRS. From this, company produce financial statements such as the balance sheet, income statement, and cash flow statement. For example, when a company prepares its annual report, it shows how much profit they earn and what their liabilities and assets are. Second, cost accounting. Cost accounting is more for internal purposes. It focuses on measuring and analyzing the cost of producing goods or services. This helps management to control costs and improve efficiency. It looks at different types of costs like fixed costs, variable costs, direct and indirect costs. Cost accounting also supports decisions on pricing, budgeting, and profitability. For example, a manufacturing company may calculate the cost of producing each unit, including materials, labor, and overhead before deciding on the selling price. Thirdly, and lastly, management accounting provides both financial and non-financial information to help managers in planning, controlling, and making decisions. It is not limited by strict accounting standards, so it's more flexible. It can include forecast, budget, performance report, and financial analysis. This helps managers when deciding on investment, expansion, or cost control strategy. For example, management reports may show the forecast of next quarter's sales or a break-even analysis, which will guide managers in better decisions. In conclusion, financial accounting is more for external parties, cost accounting is mainly for external cost control, and management accounting is to support decision-making by managers. Each of these plays an important role in ensuring the success of a business.
Assalamualaikum, my name is Muhammad Amin Ofal and I'm answering question 3. The question 3 is explain the accounting concept of below with suitable example. A. Materiality concept. The materiality concept states that an item or transaction should only be recorded in the financial statement if it is significant enough to influence the decision making of user. For example, a company earns 10 million ringgit in sales. A small transaction of 200 ringgit wrongly recorded will not change the decision of investor because it is immaterial compared to total sales. B. Business entity concept. The business entity concept states that a business and its owners are treated as two separate entities in accounting. For example, Mr. Ali start a business and invest 15,000 ringgit of his personal saving into it. From the business perspective, this is capital received. C. Going concern concept, accrual concept. Going concern concept. The going concern concept assumes that a business will continue to operate in the foreseeable future and will not be forced to close or liquidate its assets. For example, a company buys machinery worth 100,000 ringgit with a useful life of 10 years. Under the going concern concept, the machine is depreciated over 10 years. Next, accrual concept. The accrual concept states that income and expenses should be recorded in the period they occur, not when cash is received or paid. For example, a company provides a service worth 5,000 ringgit in December 2024, but the customer pays in January 2025. Under the accrual concept, the 5,000 ringgit income is recorded in 2024. D. Objectivity concept. The objectivity concept means that all accounting records and financial statements should be based on objective evidence, not personal option or bias of accountant or management. For example, a company buys a machine for 18,000 ringgit. A cost is supported by supplier's invoice and payment receipt. Next, E. Money measurement concept. The money measurement concept states that only those transactions and events that can be measured in monetary terms are recorded in the book of accounts. For example, a company purchased office furniture for 15,000 ringgit. This is recorded because it has clear money value supported by invoice or receipt.
In accounting, there are several important social documents that used to record business transactions. The first document is sales invoice. This document is issued by the seller to the customer whenever goods or services are sold on credit. It serves as proof that the customer owes money to the business. For example, on 1st September 2025, ABC Company sold goods worth 2,000 ringgit on credit to XYZ Company, and a sales invoice was issued. The second document is the credit note. A credit note issued by the seller where there is a need to reduce the amount honored by the customer. This usually happens if the customer returns damaged goods or if a discount is given. For instance, on 3rd September 2025, XYZ Company returns goods worth 200 ringgit to ABC Company, and a credit note was prepared. The third document is official receipt. This document is issued by the business as a proof receiving cash or check from a customer. For example, on 5th September 2025, XYZ Company paid 1,800 ringgit in cash to ABC Company, and an official receipt was issued to record a transaction. Another important document is memo. A memo is internal document used to record adjustment or transaction that do not involve outsider. Example of such transaction included depreciation, provision for doubtful debts or goods taken by the owner for personal use. For example, on 7 September 2025, ABC Company recorded depreciation of machinery worth 500 ringgit using an internal memo. Lastly, the check counter fraud is also one of the important social documents. It is the part of check that is kept by the issuer as a proof of payment. This document serves an internal record once the check has been issued to the payee. For instance, on 10 September 2025, ABC Company issued a check of 1,200 ringgit to DEF Enterprise, and the check counter fraud was kept as evidence of payment.
Today I'm going to talk about based on example that Shuhada given. Number 1 is sales invoice, sales journal, date 1 September 2025, debit to XYZ Company, credit sales and amount of 2,000 ringgit. Number 2 is credit note, sales return journal, date 3 September 2025, debit, sales return and credit to XYZ return amount of 200 ringgit. Number 3 is official receipt, cash book, date 5 September 2025, debit cash, credit to XYZ Company and amount of 1,800 ringgit. Number 4, memo, general journal, date 7 September 2025, debit, depreciation expense, credit to accumulated depreciation, amount 500 ringgit. Number 5, check counterfoil, cash book, date 10 September 2025, debit to DEF Enterprise, credit of bank and amount of 1,200 ringgit. As for now, I want to explain the transaction, document and book of prime entry in this slide. And the first one is sales journal, date September 1, 2025, particularly XYZ Company, invoice number 0001 for 2,000 ringgit. And at 30 September 2025, sales account credit for particular and the total credit is 2,000 ringgit. Number 2 is sales return journal, date 3 September 2025, particular XYZ company, invoice number CN0005 for total 200 ringgit. And 30 September 2025, sales return account debit, and the debit total is 200 ringgit. And for the cash book, date 5 September 2025, particular cash, and the total cash is 1,800 ringgit. And for general journal, 7 September 2025, depreciation expense, debit for 500 ringgit, and also accumulated depreciation, credit 500 ringgit. And lastly, for the cash book, date 10 September 2025, particularly F Enterprise, cash out book 1,200 ringgit, and also date 10 September 2025, particulars bank receive a 102,000 ringgit.
In conclusion, overall accounting is important to record, report, and control business activities. Bodies like MIA and MSAB ensure standards and ethics are followed, while different fields of accounting serve both internal and external needs. With proper concepts and source documents, financial information becomes reliable, consistent, and useful for decision making and business growth.
Okay, that's all from us.
Thank you.
Bye.